If your real estate if you believe that you've received your tax bill and you believe that it's too high, then you do have a certain remedy and a recourse with the county to appeal that particular process. The way in which your tax bill in Pennsylvania works is that there is a certain office in each of the counties called the real estate tax assessor. His job is to determine the real value or the market value of your property. He reaches an assessment, and then he issues the tax bill, and the tax bill is based upon the millage times the value of your assessment. So there's a couple of factors that are involved that are somewhat under your control and somewhat under the county's control. The county assessor has each year the obligation to enter into an assessment. He does it by virtue of a computer program that in effect establishes the tax assessment based on values of 1998. It's a little bit of an antiquated process, but that's the way in which the county has determined we're going to reach your assessment. However, one of the factors that's involved is what's the fair market value of your particular real estate property. And he, the tax assessor, makes that assessment. He could assess it high, he can assess it low, he can keep it where it is each year. So when you get your tax bill each year, you have the opportunity to say, well, my property went down for certain circumstances. And at that point in time, you can say, as far as the value of my home is concerned, I'm overassessed. And so what you can do is you can go to the tax bureau it's between a period of March 15th and August 1st in Pennsylvania, in Delaware County in particular, and each of the counties are very similar, where you can file a tax appeal. It's a very simple process where you fill out a form, you go to the tax assessor's office and say, I want to take an appeal from my real estate tax assessment. At that point, they process the appeal. But in between the time that you file the appeal and the time that they hold a particular hearing, it's your obligation to present to the tax people that you believe that your fair market value is either higher, hopefully not, but lower than what the tax assessor has determined. And what you have to do at that point is either do it yourself by getting photographs of what we call equitable values on other properties, or comparable values to other properties in the area. And you say, my property is overassessed because you have it valued at too high and it's not that value. So once you do that, and the way you can do that is either do it yourself, you must produce photos for them, but also you could retain an appraisal who does basically the work for you. And he goes out and he looks at the property, he looks at the comparable values in the neighborhood, and he arrives at a number that says your value is over or under what your compensation is, or your tax assessment is. At that point in time, if he believes that you have a case, and that is if your value is overassessed or they determine the fair market value to be too high, you then go to the real estate tax assessment appeal hearing. This process is rather quick because they pretty much know a lot of the properties in the particular areas. They've grouped the hearings based on certain townships and things like that. And they look at the property and they have reviewed it ahead of time, and then they listen to you to add any particular information to your written document. At that point in time, what they will do is they will make an assessment of your fair market value, and then they will apply what they call the common level ratio, which is about 67.8% of your property value. If your assessment is higher than that CLR, then you will most likely get a reduction in your assessment. If the determination of your fair market value is lower, then you will get a reduction in your assessment because it's all based on that formula. And at that point, what they will do is they will issue an award or a decision with regard to that, and you can move forward and could possibly take an appeal to the Common Pleas Court, but that is usually not that successful, and you're pretty much limited to it. Another way in which you can do this process annually, every time you receive your bill. A second way in which they reassess your property is if you have made an improvement, added an addition, put in a swimming pool, increased the size, added a bedroom. The tax assessor, triggered by usually the building permits, will come out and say, okay, I want to look at your property as it's been reconstructed or improved. And at that point, he will issue to you an interim tax notice. And the interim tax notice says, I've looked at your property and I think the fair market value has gone up $50,000 to $100,000. And he'll issue you a new assessment based upon that. You also have the right to appeal from that assessment, and it's basically the same process that we just discussed. You try to get comparables to what the value of the house is as improved to say that his value is way too high and the assessment should be reduced. And at that point in time, hopefully it is, and you will get a lower tax bill.